Welcome to TheoTrade. This is Don Kaufman. It's February 28th, 2025. Just about 20 minutes to go. It's the cash close here on this Friday afternoon. Wow, what do you say about this marketplace throughout the course of the week? Just downright wild, right? I mean, markets they remain right on the edge. That volatility box, there's just wild swings, some dark signals ahead. There's a lot to cover here, of course, on this TheoTrade weekend update. Let's get right to work. So S&Ps right now are on a bounce. But the irony is, as I actually kick off this weekend update, where are we bouncing to? And the irony is 59.11. I mean, I couldn't have timed this any better. 59.11, because for those of you that have tuned in, time and again, all right, week in, week out, I've been talking just like incessantly about this volatility box. And I'm actually going to freeze the screen right now, take you to it. And that volatility box, the really specific levels that we've been discussing, is 59.11 is the downside of the volatility box. Okay, the upside right around that 61.11, literally like 200 points. But the demarcation point is literally on that 11 handle. And again, I want to make clear that's pretty much where we're trading right here, right now. So we've tested today into some very, very scary places. And where we tested was 58.48. And as I said on the Wednesday night video, that's a level to where you come through 58.48 and that's it, where we've broken through the lower edge of the volatility box, and then we're going to see some serious fireworks. Okay, the one thing that I want to really kind of kick off this weekend update with is one overwhelming thought, and that basically is this. We're going to bring up the spiders for a second. I'm going to go to the daily chart. I'm just going to show you. Okay, yes, we've had some sell side activity, but that sell side activity, okay, it's just slightly removed from the all-time high. So in effect, okay, and I'm going to cover this a couple of times over here, in effect, we haven't really inflicted any damage whatsoever just yet. And volatility, okay, agrees with that notion. Like, I mean, look, I'm not a big proponent of VIX, but the VIX basically lifted its head up off the pillow, but that thing hasn't spiked. Okay, volatility agrees with me. It's whatever. We've seen this movie before. And the reason I say we've seen this movie before, because we didn't do, okay, anything astounding. We definitely tested, as I said, okay, the lower edge of the volatility box is the 59.11, right? We're basically, again, we're kind of trading over there. And you start to breach outside of that level. And that's when it gets serious, because that's when you're like on the edge of your seat, like, holy crap, here we go. And we hit that 58.50, and it's a big round number. We hit the 58.50, and we ripped off of it. It's just this like demarcation point. You just kind of ripped a little bit higher off of it. It's all right, okay, we came back up. But volatility, all right, is dropping a little bit. Nevertheless, there's still some pretty dark signals out there. Okay, and I'm going to cover that. So this video is really not about like where we've been. It's much more about, well, where this thing is actually going. Let's dig a little bit deeper than just looking at a chart. Because just looking at the chart, this level and that level, push it aside for a second, okay? Volatility. And I want to start really with a little bit of a deep discussion about volatility, because it speaks volumes in this instance and in this marketplace. You have to look at volatility, because what's it saying right now? So this is the volatility futures contract. Now, volatility futures are they're not great to look at on a chart because they're all over the place, but they are great to look at, okay, just kind of numerically and to get a feel for what we term, and I've used this a lot, contango and backwardation. And what those basically amount to, okay, is they're distinct levels of volatility that basically say, like, are we in the throes of like wild and unreasonable risk? Want to know something really interesting here? Okay, we're on the edge of it, but we're not there yet. And the reason I'm bringing this up, because there's so many retail traders that are looking at this and they're like, holy crap, we're getting killed, man. We're off like, 250 points, right? From some of the recent highs. I'm getting killed over here. I'm going to stop you right there and I'm going to tell you, because I've had a lot of those emails this week, like, help me. Like, really? I mean, we just traded like what? From last Friday to right now, yeah, you're down a little bit, but the volatility futures haven't even, like, they haven't inverted yet. And that's one of the big standouts over here. And when I say they haven't inverted, okay, what you got to look for is this contango and backwardation. And I'm just going to make this as clear as day, because I've said this like every single video. You got to look at March. And March right now is trading at 1910. And then you look at the April vol, and it's trading at 1925. It's just a very, very small difference. But what does that difference mean? That's the whole key to this. What does it mean? April is still above March. That means that the future still sees, okay, evidently slightly more risk than the present, okay? That is unequivocally not a sign of any type of capitulation. And it basically says, like, well, we haven't really gotten rocking yet. When you're really rocking in this marketplace, when things are getting killed out there, okay, I'm going to tell you exactly what happens. Like the March will shoot, for instance, to like 21, and it'll leave the April behind. And April, for instance, like jump to, let's say, like 1970. So it'll invert. Okay. And by the way, I'm making this a little bit more dramatic than it would be, but it will invert. And what that means, so like the March volatility futures jump to 21 and April's at like $19.70, right? They've inverted. What that basically implies, risk is here, risk is imminent. And in the future, okay, we're going to resolve, meaning that we're going to calm down in the future. Okay. Because like the world is blowing up right now. So if you're sitting there and you're like, duck in cover, what's wrong with you? You haven't even seen risk yet. That's the point that needs to be taken away from this. What's wrong with you? You haven't even seen risk yet. So in the first bullet up here, I'm like, volatility. Are we there yet? And the answer is no, not even close. Okay. You haven't even seen the vol invert. The VVIX, okay, the volatility index is sitting at 110. What does that mean? It's actually what we call the VAMA zone. Okay. That's the point in which the professionals are actually hedging, okay? And that's usually like a sign of like, well, get under your desk and start rocking back and forth because the crap is going to hit the fan. And we've been there now, okay? And it looks like, look, the market's not closed yet, but we're basically going to close at or around the 110 region, which is a pretty serious number out there. So very, very important to understand, okay? Volatility is making a statement right now, and that statement is as clear as can be. And that is, whether you want to look at the VIX hasn't spiked. As I said, the VIX listlessly lifted its head off of the pillow. Okay, like that's it. The VIX was lying dead in a pool of its own blood like, a week ago, and here we go. So it lifted its head up, but this is by no means a VIX spike. And you start looking back, okay, over like the last 3 years, you'll see some pretty, rambunctious VIX spikes in here, okay, that were really, really short-lived. But you got to get up, okay? You want to get crazy? Let's get up to like 27 the VIX before we get crazy. And again, these are the little VIX spikes in here, nothing, okay? Let's get crazy. And I'm not ready to call this crazy, not even close. The volatility futures haven't been there. The only thing that is displaying that, holy crap, we're going in, is the VVIX. And the VVIX is known, of course, to overreact. Now, let's continue on. The market right now is absolutely higher. But one of the things that we did not see, not even close, okay, was correlation when we were selling off. And without correlation, there's no capitulation. I said that last weekend, and I'll say it again. Now, there's an interesting and very, very ironic twist, okay, to the plot. And that's this, okay? We're correlating right now, but it's to the upside. In my opinion, that's not good, okay? What we basically have is like a quintessential, in the S&Ps, they're catching a bid right now, and you're in this midst of like this, what we term kind of a rip your face off rally. And that rally can definitely last, okay, a few days. But the one aspect when you're thinking of sell side activity, you want to come in here and you want to see the exact opposite. You want to see like 100 products down. You want to see people puking in the streets out there. And we didn't get there. We didn't even get close to it. I mean, at the depths of yesterday's sell side activity, in the depths of yesterday's sell side activity, okay, the S&Ps were down basically 90 handles. And this was a positive advanced decline line. It basically closed at like a 50-50. But that's wild to think that you actually have the S&Ps capable of selling off, 1.5%. That's it, though. It's only 1.5%, so let's not get crazy. Okay, so it sells off like 1.5%, which is like a 50-50 advanced decline line. Again, this big twist over here is like right now we're correlating, but it's the upside. So why is that going on? Again, probably a degree of short covering, which is very normal in the midst of volatility. I mean, the hallmarks of volatility are always going to be that rip your face off, unrelenting rally. My question right now is it enough to really grip hold, or are we just going to sell right off into it? Which I'll cover that in just a moment here. Next aspect in here. So again, I'm a big believer that, number one, the volatility basically stated like, yeah, whatever, okay, take it in stride. It's not a good sign because you're taking this in stride, right? You're not feeling a huge amount of pain in the marketplace. You need to feel that pain, okay? Feel the pain, all right? And then we can capitulate and get it over with. That's clearly not in the mix. The correlation confirms that. Correlation, it's there to the upside, but not the downside. You need the marketplace to literally puke its guts out. All right, let's talk about bonds for a moment. Bonds, here's another aspect that's really, well, disturbing, okay? We're buying bonds, and we're probably right now buying bonds for all the wrong reasons, and that is we're using it as defensive posturing. We're a rotation into bonds, okay, where a lot of trade is sitting back and going, yeah, I've had enough. Okay. And one of the things that really resonates with me right now, that this is a little bit of like it's a rip your face off rally. Look, it was going to happen sooner or later, right? So you get this rip your face off rally right now, but the bonds, what are they doing? They're not backing off an inch because they're looking at it and they're like, all right, yeah, go ahead and rally yourself. Okay. But the bonds still see risk ahead. Think about that for a second. So the bonds have been rallying right now. And you're going to come up with a lot of reasons. Well, what? Okay, what do you really got? It's probably a rotation, out of equities, out of some of the tech stocks, back into the bond market. Because, lo and behold, the interest rates, and I've talked about this also quite a bit recently. Like when you start looking at interest rates in the TNX, has dropped to about 4.2%. That's the 10-year, right? So the 10-year is sitting right at about that 4.2%. You look at it and you're like, 4.2%? Well, sure as heck beats the crap I'm dealing with inside of the S&Ps right now, so I will take it. And again, I think we're seeing the beginnings, if you will, of a rotation out of S&Ps and into things like bonds and notes. Both of which have rallied wild amounts. Like look at the notes. Okay, we're all the way back in the notes to effectively where we were in early December. So again, is inflation a problem? Maybe, maybe not. But right now the bonds, okay, they're not worried about inflation. Okay, on the contrary, what the bonds are worried about right now, okay, is it's save me. Okay, that's traders actually moving into the bond market over there. So it does appear to be some defensive posturing. At this point, okay, I've also had considerable questions about the dip in this marketplace and is it an investable opportunity? Meaning that forget about trading for just 1 second because I got a lot of trades on. There's no question. I got all kinds of trades on over here. But the big question kind of comes into play right now is, hey, we just had some sell side activity, man. Should I jump on here? Okay. And my answer, even in light of whatever you might think about the marketplace or the economy, my answer is like absolutely not. Not until I see the higher degrees of correlation. There's again, no, but nothing capitulated here, nothing capitulated in volatility. The bonds are defensive posturing. Okay. And I just, for the life of me, I cannot see how this is an investable opportunity. And of course, you're going to look at stuff like NVIDIA, right? And NVIDIA trading 130, pretty stellar earnings announcement, but not good enough. Some sell side activity in there. Okay. Kind of hanging on by a thread. You look at stuff like Microsoft. Show you Microsoft, okay, could bounce here, no question about it, right? Matching lows here right around like that 385 level, okay? Absolutely could bounce. But I don't think we're anywhere near like a quote unquote investable opportunity. By the way, I love this because the S&Ps have actually ripped right off that 59.11. I mean, we touched the 59.11 as I started this video, okay? I'm 15 minutes into it here, and the S&Ps have exploded higher. Okay, by 30 points in the last 15 minutes. It's getting good. It's getting really good out there. So this is by the way, this is the kind of stuff. Look at this in Microsoft, right? They're reaching for the stars. I like it. Anyway, as I kind of further this, I don't believe it's an investable opportunity. And a lot of it has to do with like big picture. This is what I call down, right? Scary, like Dow. Yeah, that one fell flat. Anyway, take a look at the big picture. So we're going to go to the spiders for a second. And if you look at the spiders on a year-to-date basis, they're basically up 1%. You look at the QQQ, it's down on the year, ladies and gentlemen. It's down on the year. It's the last day of the month. Oh my gosh, be still my heart. You're 2 months into the year and the NASDAQ is actually down. Here's actually what scares me a little bit. Is it an investable opportunity? We're not even back, okay, to where we were prior to the election. And you start opening up like a 3-year chart, okay, that's quite intimidating. But moreover, when people start asking me about quote unquote an investable opportunity, I like to open up the max chart inside of the spiders in this particular case, and just point out that the sell side activity that we have seen, okay, this last week in trade, and really it kicked off like last Friday to obviously, today, and we're rallying right now. But look at this, S&Ps, they're coming back. It's not even a blip on the radar screen. And that's when I say absolutely unequivocally not. Can we rally back? Yeah, but we're still, okay, hugging inside of this volatility box. We touched the scary place of, 58.50, but right now we're rallying back. Nevertheless, okay, I'm going to tell you, and again, this is much more, less, I would say, about investing and more about trading. I'm going to sell these bounces right now. I would sell these bounces. And you go, well, why would you sell the bounces? Along with the idea that we didn't correlate, look at some of the sectors right now that have shown incredible strength. Now, you are seeing some sell side activity in the broader marketplace, but take a look at the XLF. You realize, okay, you're basically going to be at closing highs here, okay? This is it, people. 52.19, 52.19. This thing is going to close literally at its all-time high, okay? And it doesn't matter what you think. The market hasn't sold off. A few tech stocks actually sold off. We're still technically in the volatility box, but you have, okay, entire sectors like financials, right, being used as defensive posturing. Now, time out for a second. What are the interest rates doing? Because I want to point out how do I say this eloquently, how screwed up things really are right now. You have interest rates, I just showed you, dropping, but the financials continue to rally. That's because the financials are being used like a lifeboat at this point. And I've made this comment before and I'll make it again, right? If Jamie Dimon is in a lifeboat, okay, I would take my chances in the open seas first. I mean, there's just no way. And again, I reiterate, the real selling, okay, if it's coming, hasn't even started yet. And I'm not here to sit there and prognosticate, look, I am saying I'm going to sell the bounces. Okay, maybe we continue to bounce on Monday. You damn well better believe if we actually bounce again on Monday, I'm shorting into it. No question about it. You realize the expected move for the entire week was $112. Okay, look at this. We're only up to 61. We've already rallied $50 since I kicked off this video, right? I know. I should be long. But this is what happens on a given week. Now, okay, gonna short into it. The bigger picture is downright scary. Switching gears entirely. Let's go to the SPX. Okay, made a couple of points over here. Let's go to the SPX and the weekly expected move. Now, kind of cruising down, as I was mentioning just moments ago, as we come into the closing bell here. But as I was mentioning just moments ago, the S&Ps this week had roughly, okay, $112 move. So you're supposed to move $112 higher, $112 lower. Obviously, we exceeded that to the downside, but now we've actually rallied back. Okay, we're about halfway home. So you're going to lose about $60 in the week, give or take a couple of dollars. Okay, obviously, yesterday, which the S&Ps closed down 89 yesterday, they're just basically recouping what they lost yesterday. No question about it. All right. So we bounce back inside of the expected move. Volatility comes in, but nominally. Ironically, look at the bonds right now. They're rallying. They ain't selling off. Okay, they're rallying on all of this. That doesn't make me feel warm and fuzzy. Okay, moreover, as I was saying about the XLF, it is 3 cents away from its all-time closing high over here. And again, that stuff is just absolutely wild. But the reason I'm bringing up the SPX is a couple points. Number one, it has an expansive expected move for this past week, this $112 move. Number two, we hit the SPX butterfly, okay, yet again. There's the closing bell, okay? We hit the SPX butterfly yet again. Here's a butterfly. I literally got into this thing on Thursday for a 55-cent debit. Okay, today I was able to exit for a $1.95 credit. Okay, it's a 255% return. Now, granted, at 7 days back, check this out. I'm just going to go 10 days back. Okay, the reason I'm going like 10 days back, because it's literally, all right, it's literally 2 weeks in a row that we've actually hit. Come on, think or swim. It's 2 weeks in a row that we've actually hit, all right, the SPX butterfly. And here's the previous week. In on the 19th, out on the 21st, in for 50 cents, out for $3. It's a 500% return. This week, okay, hit it again on the butterfly for a 255% return. Winner, winner, chicken dinner. What are we looking at next week? Well, after everything we've been through this week, and I'm telling you, wild swings, really, really dark signals. What are we looking at for next week? Almost the exact same. Now, this expected move is not set in stone yet. It's $115 and change. I tell you right now, okay, kind of strap in. It's going to be another wild and woolly week. We have a lot of data coming out, but I'll tell you, you push it aside. Forget the earnings right now. Watch the moves day to day, okay? Right now, I would say fade this market. Look for us to test once again under the 5,900 level, okay? And then some. With that, thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.